the Fed has secretly pivoted, changed its policies to avoid an enormous time bomb that is coming in 2023. Let me explain this to you in 5 simple charts. I'll run through this as quickly as humanly possible. None of the following, of course, is financial advice. You know that by now. I aim to share with you my insights, my research, my thoughts, and I hope it is one of the facts you take into account. But obviously, don't just, blindly believe whatever is here. Always check facts, which is why I give you sources. So if you remember, the Fed decided in May this year that it would start shredding money. And they said they would shred money or reduce its balance sheet, which is just shredding money in another way, by 30 billion a month in government debt and by 17.5 billion in mortgage-backed securities, which is basically a bunch of your mortgages stuck together, resold, the kind of thing that caused the 2008 financial crisis. And that was the June to July plan. From September onwards, they were going to do 95 billion per month. Quite a lot, you'd think, right? Yeah, quite a lot. That would therefore be in 2022, a whopping total of 560 billion of money in the shredder, disappeared, gone, poof. But here's chart number 1. This is the money supply in the US. M2 looks like an impressive chart, right? Oh my God, look how much money they've shredded. Well, this is 2022, the entire year. Do you know how much money they shredded? There we go, 1.38%. Does that sound like the target? No. They've only shredded about 400 billion. 560 was the target. Now, $160 billion is a pretty big difference. So they're not just fabricating labor statistics. More on that in another video. I'll link to it on the end. But they're doing the same on the money side. If you want some unshredded numbers, here is a free benchmark that I put out just for you so you can become a smarter investor. Honestly, completely free, just from the goodness of my heart. felixfriends.org/top23. Get your hands on that, and then I'll show you the other charts so you can see exactly what this is all about. So this is the Fed balance sheet again this year. Again, looks impressive, right? Look, it's come down. Oh my God, it's come down 2%. 2 percentage points it's come down this year. Since the very peak, just to be, transparent, 4%. So we've shredded 4% of all money. But let me give you some perspective here. This is what the actual money supply looks like in the United States. It looks like dinosaur, really. It's a bunch of dinosaurs. So money supply since 2003 has gone up 1,072%. So removing 4% from that is really neither here nor there, right? Now, what's the problem? What have they uncovered that is making them terrified and doing this without telling us? Well, this little chart here shows you in green the balance sheet and in blue the S&P 500, SPX for short. And what can you see? The S&P 500 goes up when they print money. Surprise, surprise, they print money, they buy assets with it. The money goes and seeks the highest returns. The highest returns have been in the stock market traditionally because interest rates are so low, because they're keeping them artificially low because of all the money printing. And now that they're starting to shred a little bit of money, what happens? Well, the stock market tanks with it. Right. So what do? Well, let me show it to you another way. Let's hope that they make the secret pivot, this missing 160 billion, into official policy very, very soon. Because what we have on this chart here is the terrifying bit. US reserve balances. The US balance sheet is on here in red. Let me get a red pen so it's clearer for you. Microsoft, may I have a red pen? Apparently. So that is the balance sheet, BS for short. That is an intentional abbreviation in case you were wondering. And the blue thing is US total market cap of equities. And it doesn't take a genius to figure out that The two are incredibly closely correlated. And basically, the only reason the stock market goes up is because they print a load of money. And the only reason it goes down is because they shred a load of money. So if they are actually going to shred what they say they're going to shred, hang on to your chair, get a parachute, and better go and buy some bonds or some sort of hedge, because it could get really, really, really ugly. So this is what they've discovered. They are watching this chart. They're just not telling you because they need to squash inflation, and they need you to believe that they're going to squash inflation by shredding money, but they can't possibly, because if they do it, they'll tank the US stock market, and I don't think they're actually going to keep doing that. So in my view, this whole policy we're being told, we're being fed, is a complete fabrication. They have no intention of going through with it. So it's going to go south further as they keep shredding money, although at a slower pace than anticipated. And they'll come up with some technical reasons for this and that and the other. But they're meant to be at this very moment actually actively selling mortgage-backed securities. And they're not. So it's a total fib, if you want to put it politely, and I don't really go in for that sort of thing, but it's something you have to be aware of. If you really want to understand how the market truly works and learn from a bunch of former investment bankers, me and my team, come and join us. We've made a fairly staggering return this year, 100-something% up, and we teach you, and don't promise you, quite frankly, that you'll make the same returns, because I don't think that would be honest, because your brain isn't my brain. But we'll teach you exactly what we do. I'll teach you exactly what I look for. I'll show you every single trade that I'll do in 2023. All you're going to do is, if you have a 5-figure portfolio, come and give us a ring at felixschwenz.org/coaching, and we'll walk you through it. If you're just starting out with your investing journey, absolutely brilliant. You're going to want to add an extra income stream to that. Again, we can show you what that might look like. Go to felixschwenz.org/options, join our pre-recorded course. That's like 100 lessons, plus you get to watch me trade live every week, and there's a coupon code for that, which is 2023, because I want 2023 to be the best year you've ever had. And you can't trust the Fed. You can't trust the White House. You can't leave it to politicians or other people. You have to take matters into your own hands. If you don't, and you expect 2023 to be better than 2022, well, in England, they would say you should be sectioned under the Mental Health Act, which basically means you should be in the lunatic asylum. So don't be in the lunatic asylum. Give us a ring instead. And quite frankly, let me know down in the comments below, what do you make of this latest? Is this deception? Is this just something that could be explained away, like the 2 million jobs that we are missing? Or is this an intentional strategy here to keep us dumb and dumber, hope that inflation will go away because they printed 40% extra money in a year, and they thought that that wasn't going to be inflationary? They actually changed economic textbooks, because that's how much people believe whatever those Muppets at the Fed come out with. I studied economics. I never quite believed it. It didn't seem to make any sense, and it hasn't, and it's been inflationary, and the story here doesn't make any sense to me either. So I appreciate you watching. Thanks for tuning in.